we've got a great one for you today. Oh, did you see what happened? USD, Taiwan dollar. Somebody was expecting something to happen. We saw this in our community. Squeezing. Squeezy. Japanesey. Only this was Taiwanese. And there was your short signal. And it got confirmed there. And it's an absolute spiller. It's a thriller. All the way from Taipei. That's right. Just as who said Manila? Own up. Did you say Manila? Taipei, and it's an absolute crash. And it's a crash for what, you ask? What is it a crash for? Let's understand. What is it a crash for? Let's go and have a look. It is a crash for the dollar. It is a crash for the dollar, you might say. And what's been going on? Let's clean our face. Dollar down, rates up. Now, it's not quite like the last time yet. Remember that period? Rates up, US 10-year, rates up, dollar down, crash, debt down, dollar down, crashy. You know the seesaw, snap, both halves go down, underwater. Yep, we've actually got the rates creeping up on the dollar, 4337, and we've got the dollar itself going down. You just saw what it did to Taiwan, but let's just see it more generally. That was a bit exceptional. Let's have a look. Let's have a look at, wait for it. We'll say goodbye to Tron and we'll get it on here. USD on the Dixie. Let's start with the Dixie. Dollar index. What's happening on the dollar index? Weak. That's the 8 hour. Let's see the daily. Let's clean our face a little bit. A down day on increasing rates. That's not meant to happen, friends. It's not meant to happen. It is. It's not super fast rates and it's not super down yet on that, but it's certainly losing ground. The dollar is losing ground on a day their debt is getting ever more expensive to fund. That's right. Why is that happening, you might ask? Why is it happening? Because it's a debt-based failure of the hegemon primarily. It's a debt-based failure of the hegemon primarily. Primarily the hegemon's debt. 204 of you watching. Thank you very much. And we've even got a handful of likes if you like the updates on the Monday to get you sorted and straight. And we'll be showing you gold. We'll be showing you silver. We'll be showing you the debts. We'll be showing you a football match. A financial football match. That's right. Who I've got on my team and who we're playing against. You'll see that soon in a second as well. But why is the dollar going down at the time that their rates are going up? Well, you see, everything changed. When did everything change, you might ask? Let's take a walk past gold, shall we? On the way to answering when everything changed. Gold, the falling wedge we were discussing inside the community. Yes, as we go past this, nice bull. There's your flag. There's another leg up. Beautiful. Oh, so symmetrical. First impulse over. Second impulse over. There's a Greek 2 for you. And third impulse over. 3 impulse falling wedge. Trade the breakout on a continuation. Might be a return move before you go higher. That's right. That's what's happening on gold. Where did you hear it? You heard it here. The biggest bulls on gold since the 3 times a lady, 4th time breakout at 2011. Macro fundamentally, we've always spoken positively about gold. And you have pure gold link below to buy yourself some gold that's likely to go a whole bunch higher. You also have the bullion vault, by the way. Accumulate a decent sum and then buy the gold with internet gold. Keep going up with the gold price. That's right. You can buy it at any location. Use any of them. If you're in the States, hit the ITM. Buy through ITM trading. Get your gold there. Support us and you pay the same price we do. Anyway, so gold is showing it's up. What did we also show you as a chart? While we go on the way as to why the dollar is suffering, we also showed you as a chart the USD, the gold actually divided by oil, didn't we? We showed you that one. Gold divided by oil. Let's go and put it on XAU. XAU divide US oil. That's right. No, the wrong XAU. Sorry about that. USD. Let's put the dollar in. Rwanda, and we divide it by US oil. So we've given you this chart. How's that one been going? We gave this long time now. Long time. This hasn't been a short trade. It's been running for a while. And how's it gone? Well, you've probably noticed how well it's been going since round about there. There's our draw on it. You just gapped up. Why did you gap? Oil down, oil down. Oil is the consumer, down, down, down. The Rockefeller tax, when everything is going good for you, they skim deep. And when there's a recession, they can't skim as much. It's actually a substitute for rate cuts in America, who has both high inflation and terrible loss of value of its debt markets, wants to cut rates supposedly for recession, but can't. We'll come back to that. And a friend, a very positive man on the USA, who tells us that China is always wrecked. We'll be talking about him in a minute as well. So here you go, over there, big move to the upside in the gold to oil ratio, all the way from 14 barrels for that one single ounce, running all its way up to over 60 soon, sitting at 58.5 right now. You heard it here, and it was on for you over here. So gold doing great. What else did we say? We did warn, don't rush too fast into the gold's, the pivot into the silver. What's happening now? The silver ratio, this is on a 4-hourly, the silver rate, gold silver ratio is heading back up, Yep, everyone said, that's it, whale into silver right here, right now. It's done. We're on a 4-hour chart. Careful, careful, it ain't done. It ain't done. We need such a big crash in all the debt setup of America that you will feel it and know it when it's done. And then you'll fall one more leg again before it's done. That's how it's going to be. This is the big one. This is the big one. We've said it, demand-destroying event, and now we're sticking to it. There are melt-up boys that will say, new high coming for the stocks first. No, we say, no, no, no. We'll talk in this stream with you on the melt-up boys. And the biggest buyers are retail mom and pop, BTFDers. That's right. They've been taught for half a generation. They now finally think they've learned the script, and they think nothing's changed in the environment. Keep, rinse, repeating. We'll be talking about their fate. But gold and silver ratio heading to the upside. What else have we got to talk about that we'll be handing with you today? So our fear indicators. We've got to also get out the USD JPY. The USD JPY. Let's get him up. So we've been warning. There's people that say, there's only one way for the yen, and that's loss of value. There's only one way for the yen, it's loss of value. We've warned about this head and shoulder. We've said before, as you will hear and see in tweet exchanges, people believe there's no carry trade of any significance that could have an adverse effect to the dollar if it were to reverse. We don't know the full extent that institutions, hedge funds, all forms of multi-generation, since 1980 Japanese correction crash, the borrowing rates have been ridiculously low in the yen because they had to work off a huge pile of debt, but they bought their own debt inside and made it their consumers, their citizens, sustain their own Ponzi. That is not the situation with America, who relies on everybody else to buy their own debt, and for whom the dollar is going down and rates up today, and you had it more violently in a far more harsh warning not so long ago. This is a short USA. Sorry, my American friends. It is not directed at you. It is the mercantilist classes that have set about a controlled demolition of your currency to do what they've done with previous empires, coin clipping and undermining the soundness of the money. That's right, and it's now your turn. That is how it is. It's a harsh and ugly truth. And for those that keep saying, no, we're better set, China's wrecked, we're fine. We got a little bit of that exchange by the milkshake man himself saying that China is in a depression because their rates are, wait for it, let's get China's rates up. CH 10-year yield. That's Switzerland. What is China? CN? CN, 10-year rates. People will say, China's in a depression. Look at the spill in rates. Well, it's very disingenuous for someone to come up and say China's in a depression. He's always been saying China REKT on his tweet in a conversation, when in actual fact, for that to happen, it means people are comfortable on owning that debt. 71% of Amazon is China. It was 80% in Walmart in the mid-teens, and it's about 60% today, not including other nations that China proxies, which could be Mexico and Vietnam, and puts production not in the Chinese country, but is of Chinese capital and origin, are in your Walmart stores. Let's be clear, if China is slowing down as the producer of the world, the nations that were the buyers of that product are slowing down too. And whilst I don't have a problem long run that this will in the end be classified as a depression, a global leper colony that unwinds, the reason American debt that is in as bad a set of circumstances economically as part of the same economic village is not going to 1.9 is because of a risk premium for collapse. They wish. Powell hasn't cut because the markets won't accept it. No one will buy the debt at those prices. In fact, he has to devalue it with over a long period and hope it doesn't go into contagion collapse, which is deeply unlikely. So whilst this debt goes down here to 1.62, it is because it is a nation that produces more than it consumes and stacks gold with the surplus, versus a nation who is at end of tether. And I'm going to keep reminding you of this, guys. We told you first in 2020. This is our football match. Let's get over to it. We told you first in 2020 how it will look, and we said the following to you. That in 2020, in our lovely new game of football, we said, let's try open that again. Open with, you guessed it. We said in 2020 that the debt market has changed and it's the biggest call we've ever made. We said at the end of 2020, you will learn to realize that the fact that the debt market will not tolerate any further at the level of 7 trillion that America created, plus the 21 trillion they sent to the banks, this level of borrowing by this nation, that this was going to change and it would set in motion the end of reset. That was the end of 2020. Then later, we were joined by, in our beautiful world, on our football team, Ray Dalio and Stanley Druckenmiller. Druckenmiller and Paul Tudor Jones, in fact, that's not Dalio, of course, have said the following. They are short in the back end of last year, November, they are now short American debt. So all the parasites that have set about over-indebting the nation, I'm not saying Stanley Druckenmiller and Dalio have done it, but the system inside which they operate, the banks that they used to work, the George Soros friendships, partnerships, etc., they are going to make out like bandits in this collapse. The big short, think Michael Burry, the hundreds of millions to billions made, it's all coming for that class that has access to that degree of leverage. You will be not party to the great gains that will be made. You will not be party to the great gains will be made, but you can still do well. There's Paul Tudor Jones and there's Stan the Man, and they have joined us in our financial football team as Bears on USA. Short USA is to short, and I will tell you and show you a chart while we take a pause from putting our financial football team up against our rivals, which you'll soon see and learn in due course, and show you this chart right here. This chart is the 10-year debt instrument, which is the most common one in the world, divided by gold. Short USA is short its debt instrument and short what it's based in the dollar. Remember, every UST is based in USD. And this is how it's going for the dollar against the 10-year. And you'll see that was a relative high for the debt instruments, around about 2000. And since then, this is the journey path you're in. a very steady decline as as gold started to become of greater interest. Then they brought about the QE and QE1 and 2. They create so much breakdown and so much fear, they got some money to run into debt. That's as much as they could rally it during the QE1, 2, and 3 era of subprime. And here is your localized high of 2020. And even still now, gold has been beating it. They brought out so much fear, shut down the entire world, and that 10-year divided by gold could not make the high on that tiny rally versus gold. This is, remember, the 10-year divided by gold. The value of the 10-year, not the yield, the value. This is valuation divided by gold. Since that massive immense of 2020, we called short on TLT, which we'll show you in a chart in a minute, and long gold. And we've been vehemently long gold all this time. These are your debt instruments. These are your debt instruments losing chronic value. And then from that 2020 moment, you went a little bit kind of sideways in a channel, and you're now spilling from here. Everyone knows what Stanley Druckenmiller and Paul Tudor Jones are now doing. And they are short American debt, which is short the dollar and the debt instrument. You win on both. The only way they can get out of this is chronic devaluation of the debt and or the currency simultaneously or in a left-right basis. You had a huge collapse in the TLT market. Again, worth reminding you of how it looked way back then. TLT, this was our trade call, and it has fallen. Let's clean our face. Since that moment over here, there you see it, September 2020, first inverted HVF in a new trend, always overperforms, made the neckline, shoulder rally, head and shoulders down, hung about over here, and then spilt even further and is on the lows at the moment. On the lows, that's in dollar values. That's in dollar values. That 20-year long-term debt ETF is underperforming chronically. It is underperforming chronically in an environment where the dollar is now losing value, a la the Dixie that we showed you over here, daily and weekly. Look at that spill, guys. You're losing value inside losing value. My American friends, who's an American right here, right now? Hit the like button if you're an American. I want to know how much. We're on, how many likes there? We've got to see how many Americans are in here. Let's have a look. Hit the like button if you're American. 608 watching. That's great news. How many likes have we got? Hit the like button if you're American. I need a number. I'm not seeing a number. Where's my number? Where's my number of likes? 4 likes, it says. Must be wrong. I know there's more than 4 Americans in here. So if that were happening, guys, Americans, you need to understand your debt instruments that your pensions are probably sitting on are collapsing. And the currency that is your basis for your living standard is actually collapsing. You are having a collapse within a collapse. Your living standards have already been peak America some time ago. It may even be as far back as .com that you had peak America. 99 might be peak America, guys. You might have had a few rallies, for NASDAQ highs, but you might be at peak America. Your currency is devaluing. Your debt is devaluing. They are reducing your living standards. By devaluing your currency, you can buy far less with your money. You are right now facing a living standards crush, which has only just began, and it will go lower. Stacy from Los Angeles. Shout out to Stacy. Daryl has got an interesting comment. Jack McNulty, we got some number of Americans, Belgians, all of them. You are the worst and you're going to get hit the hardest. But don't you worry. Europe is only a couple of paces behind and is going to fall equally hard. So's Canada, so's Australia, so's New Zealand, all the English-speaking nations of the world. Primary language, all of the white European nations, one should say, of them all that has had the parasite within, is going to find themselves in a debt-based collapse. But particularly America's hegemon to fall. It's going to fall hardest on you. I'm sorry, it's bad news. Bad news. But you can move. You can do things, you can go short, you can protect yourself, you can understand, and you can make the best of a bad opportunity. There will be opportunities for you. So that is what's happening. Dollar index really hard down, and it's a real problem to even think about rate cuts. That's why you had this Trump versus Powell vibe for a little bit, and then he was also told to back off. He doesn't understand anything. He posted on Truth Social, I was not afraid of what went on in the bond market. Somebody told him, how did you post it? It's classic inversion. He was afraid of something that went down on the bond market after someone explained it to him, I'm pretty sure. The debt financing opportunity or option is no longer available to America to the same degree it was. Who can do QE now? You have China at 1.62%, who could do quantitative easing and release a lot of debt, and the rates wouldn't climb too high. And you have America with the dollar crashing and the rates going up. How do you do QE there? First, you've got to be at low rates, typically to do quantitative easing. It's very unscheduled to be able to do it while you've got rates at 4.3. You cut rates first, but that requires demand for your bond market. Nobody wants to buy. You could face a rate spike. And that could be very, very damaging. And at an extreme point of rate spike, you may even get a turn and a violent spike in the dollar. But by that point, it could be so low, it might just be a reaction to what is happening. So let's go back to our football team. What's been going on? And let's start over here. That's the Taiwan dollar. That's the collapse, a bit of an unwind. Over here, we have a shortage of treasuries, not enough treasuries. So in our football team, in a football match, you can sometimes be too smart. You can sometimes see things in a way that maybe is kind of technically correct for a moment, but is not actually the right thing to be focusing on. Right here, being too short treasuries is actually not the situation. You've got too many. You've got 9 trillion to roll, and there's nowhere to put them, and their values are dumping, and it's become an open secret. Everybody knows. You've got a lot to put out there. And there isn't the demand, and your rates are going up. It's not a good time to be discussing being short. There's a shortage of treasuries at all. There is an absolute surplus and a glut of American debt. Let's understand that. There's an absolute glut of American debt. The fact that rates go up on even a small amount of selling, and I showed my community, and we did this in non-farm payroll, there was actually gaps in the bond trading market. In other words, when people started selling the debt, there wasn't much depth to the bid stack. You have this huge market cap for debt, and yet the liquidity at current declared price is actually quite small. It's almost like a shitcoin that has been issued in the crypto realm, and 90% is held by one guy, and of the remaining 10%, 7.5% is held by his mate, and 2.5% is liquid, and you put a couple of bots to masturbate with each other on the buy and sell side, and you push it up and say, look, it's moving, and you use some of your money on your 90% to buy it up, and then you make yourself an unbelievable billionaire. The price is up there. Then all of a sudden your mate at 5% and the rest of the market thinks this is a scam, we don't like what we heard, and they all try sell, and you're not bidding. And the market gaps down. Why are you gonna help them get exit liquidity when you're the scammer sitting with the bulk of the tokens? And what ends up happening is that market cap was vaporware that disappears. That's the valuation in terms of how you should view US treasuries right now. The US is a short. It went isolationist, nationalist with this tariff. They went into scavenge mode against their main trade partners and even their allies, because they need so much money and they've got so big a hole, so huge a trade surplus, record trade surplus, negative growth for Q1. So let's just get that straight. You're buying much, much more of other people's stuff than you've ever done before. That's right. And in that, you're selling much less of your stuff than you've ever done before. Your whole economy is contracting. A negative quarter, guys. a negative quarter generally in terms of growth. That's what's happening. And you then turn around and say, we need money. Hey, all you guys trading with us, why have you got a surplus with us? We're going to charge you a tariff equivalent to that surplus. Well, that's not how you make friends and influence people. And when we talk about that a little more, you will see that making friends and influencing people actually brings them together. It brings them together. Arnaud Bertrand is showing us, give him a follow, that there is a joint statement between China, Japan, and South Korea in which they take a unified stance against escalated trade protectionism. A clear reference to Trump's tariffs, and they write that their common policy priority is to reinforce long-term resilience of the region. So you're forcing them into being friends, you're forcing them into potentially creating a trade bloc like the Eurozone, where they will defend their interests with great robustness and pass laws that are good for all of them and actually protect themselves from the kind of bully in the pub vibe that Trump has had to pursue in lieu to find money and reductions to a major trade deficit that amazingly they even had former Treasury Secretary Granny Yoda Yellen Yehudi. That's right, they had her on there on CNBC saying, oh, he's going to have to do a lot better than this, and he's going to have to cut this, and he's going to have to cut that. Thank you very much for your 4 years, your 8 years, whatever years service, both as previous Fed head and as Treasury. Thank you very much to show up and tell us about all the tough stuff that's got to be done, that you sat there for the better part of I don't know how many years in the Democrat Party and previously in the Fed, head of the Fed, ensuring that the pump and dump scheme pumped up ever higher on debt and is now ready to dump really hard. Part of the many criminals, Yellen, along with Greenspan, Shlomo Benank, all the criminals are there, the Fed heads, and all the Treasury handlers. Those guys broke your country. Hear me now, Portnoy. Those guys broke your country. Sit on that bar stool the other way around, my friend, and tell me where the sun shines. That's your problem, mate. That is your problem right there. The people that broke your country, that overconsumed, over-indebted, continued to overspend, and brought your currency as a tax on you through inflation, reducing the average American's lifestyle. And is also being done, by the way, in Europe. Thank you, von der Leyen and Agent Orange and all the other little criminal vixens that they have around there. World Economic Forum leader, Keir Starmer and the rest of the boys, Boris, Friends of Israel, all the criminals are there and it's all captured and they make you part of the leopard colony in your country. There is no nation in the Western world particular that pursued policies of sound money. There is no nation in the Western world of any scale meaningfully that pursued sound money and did not go and do over-indebtedness. And that is why I don't see it as being very plausible that you'll find solutions in those nations as the government goes into scavenge mode. Recognize that what Trump is doing to other nations is what your government will soon be doing to you. We need more money. We need more money. Unrealized capital gains. Pay tax at point of sale. Do this, do that. Your inheritance tax. You're this, you're that. They're everything. They are all coming. But never worry, because a meltup is on its way. A stock market meltup is on its way. This is the perfect environment, friends, for the bid stack just to be swarmed with money all the way up past the previous high for a proper move to a new all-time high in your stock market. BTFD traders, retail traders are buying way more stock on that which they think they've learned. On that which they think they've learned over a couple of decades of Brainwash train. You buy the damn dip on tech. You buy the damn dip in tech. You buy the damn dip on tech. You always buy the damn dip on tech. Until you don't. Until there is no QE, there is no lowering of rates to the levels you previously thought because you broke your debt funding market. Who has the ability to do it? China at 1.6% can issue as much debt as they like because that ain't a heavy price to pay. Not forever, because they'll go the same way as America. And that's not a punt for debt markets in any sense. The only thing that wins was gold. And what do they do with their surplus? They buy gold. What does America do with their deficit? They spend more and put ever more in a parabola on there. That's where you are. But that, my good friends, with your consumer REKT, with 42% of home loans being rejected, 36% of auto loans being rejected, is the consumer environment for many consumer stocks. Amazon, as I've said before, is still 52% Amazon.com, what they sell over there. Consumer is wrecked. They've all been warned. You're going to have shortages for this break in trade. Once the inventory is sucked up, you're going to have empty shelves. You're going to pay more for the final ending stock that's quickly being whittled away. You will have price spikes, cost of living spikes, and then you'll have nothing on the shelf for a while. Even if you solved this right now in America, because of tariff tantrum will bring this to you, and that's the environment where America is awesome and China is wrecked. China's in a depression, but America isn't. That's what we're hearing from our friend over here. Captain America, way, Captain America. China is wrecked. I'd rather be the producer. Don't get me wrong. America goes down, debt crash. This is terrible for the planet. This is terrible for the planet. The ructions will be felt everywhere. The producer nations with surpluses will go down. They'll have unemployment. A lot of things will happen. There'll be a downturn for sure, for sure. Hegemon. And you know who gets up and carries on? They will. You know who will have a protracted downdraft, which will get worse and worse and worse. When you start to try make things, you start to try build a factory in the US of A. You don't have the robotics. You don't have the advancements that these guys have. On the other side in Asia, you don't have the scale. You haven't invested in infrastructure. You invested in wokeism, quangos, stimulus checks, and everything else. Your airports are a mess. Then you go to Singapore, you go to Beijing, you even go to Qatar, you go to Emirates, you go to Dubai. You go see the airports, the willingness to do business. This is end of empire. This is what I mean by short America. Dollar and debt down. I'm sorry, Americans, you need to short your own country. They did it to you. Build your wealth and put it in a separate currency. Get yourself some Swiss francs, but better still get gold for your cash holdings. There isn't a shortage of Treasury. Whose team are you choosing? In 2020, we were over here and said, it's the biggest, most critical reset call we've ever made. The debt markets have turned. Your funding mechanism is gone. The overdraft is gone. We got joined by him. We got joined by him, who are now currently short. They told you in November 2024. That means they were putting on the short the whole of 2024. This is the biggest Captain America. You won the lottery by being born in America. Warren Buffett quote. We are going to go over some of the things he has said recently. He is greatly concerned about assets based in dollar. He has announced, and this guy could go on forever. He's like the Queen of England. God knows what those folks did. They never seem to die. They run to 106. He's 94. He's standing down. He could have stood down 3 decades ago. He's kept going to here. I wonder why. I wonder why managing his money has lost its allure for him as the man who was Captain America. And he's announced his successor, and this will be his final year. And in the last, I don't know how many quarters, he's been a net divester from American stocks and is talking about the new policy that will be internationalized more. The new stock guy is going to be Mr. International, where he was Captain America. That's what's happening at Berkshire Hathaway. I'm here to preach it to you and tell you how it is. The guy who always drank the Kool-Aid on America is telling you he's got problems. He doesn't want to be the guy to fix that trade deficit. He doesn't want to be the guy that has to deal with the budget overspending. He is warning you. Your biggest cheerleader has flipped and he is warning you, and his conduct over the I don't know how many quarters running into many years of divestment out of American stocks into cash is a massive tell. It's a massive, massive tell. And he has now moved on to our team along with Ray. Let's go hear what Ray Dalio and Warren Buffett say, and you can decide whether you want to be with. There's too many treasuries. Well, I mean, there's not enough treasuries. There's not enough treasuries. America wins, China's wrecked, and meltup anytime soon. These are bad arguments that are not based on economic policy. Let's go and have a look and talk about what Ray Dalio has said recently, and our friend Warren Buffett. What have they been doing? Let's go have a look. So the Asian markets, Korea, Japan, and China are now pals. They're going to work together for the greater good. These were enemies. These were enemies. This guy wrote the book. I haven't even read it. We'd come to our own conclusions long ago. We called short before his book was out. We showed it technically to you on the TLT and many of the others. And this is how this guy is paraphrasing. This is not his own words, I would say, but this is how he's paraphrasing. The US is dying. 500 years of history says we've entered the final phase of every fallen empire. Ray Dalio, American, is telling you America has entered the final phase. And I can tell you it's the final phase of the final phase. It's the debt collapse. It's the currency contagion. This is gold, gold, gold. Links below, gold, gold. And when you're done buying gold, buy some more gold. Wake up in the morning before you have coffee, buy gold, have your coffee. Remember, you never bought enough gold, buy some more gold. And the links are below. ITM trading in the US, pure gold in the UK, anywhere in the world, and bullion vaults. In the meantime, if you only have $50 a month, go and do it. You have suddenly a stake in your future. You have something for you that is growing. It's actually growing. It's holding its own in a world where everything is falling and the parabola is extending. It is doing this. The convexity is going down, and it's not great for the US. Don't listen to these mood music guys that tell you China is the one that's wrecked, whose bonds can actually fall to 1.6. Why can't the American debt fall any further? There are no buyers. It's at an unstable level, sitting here unhappily at 4.2. And if it gets any more nervous for America, it's going to go up, not down. Every empire follows the same pattern. If you have the same mercantilist lend end of sound money, extend so that we can enrich ourselves to own all the assets of the world, you will go through the same crisis. If you have the coin clippers in every empire, you will end up in the same situation. It doesn't have to be. There have been empires that have been 1,000 years long in history gone by, where there were no coin clippers. There weren't any Pharisees, usury extractor lenders that were there to undermine your culture, that took straight away the morality down, down, down for their existence and undermine sound money. But if you do that, you will follow this pattern. It starts to decline. You can read the whole thread for your sign. You go into decline and disorder. You get diversified so that you're non-homogeneous and non-unified. That's right. You get diversified and feminized. That's how it works, and then you can break it. The independent, clear-seeing person that is principle-based, and there are many women that show these attributes, by the way, those people get marginalized. They get called names, all sorts of names. And that is Dalio. That is what some of what Dalio is saying. National debt of the United States. Wow, 36 trillion. Forget it. The number's academic. It's so big, it's over. People are financing food on credit cards that charge mega oceanary rates. Those same banker corps owners, money lenders, sons of Pharisees are giving you credit cards to buy food that are bankrupting you for the future. You are on the wrong side of a compound interest equation that's there to destruct you and destroy you, and you think you would never do it until you have to eat. You will do it if you need to eat. I know it. I've been there. I've had to do it. You will know it, and it will come for you if you're in the Western world, that you will borrow at the highest cost of credit a credit card. That's what will happen, potentially. That's what's designed to happen as part of a contagion and a collapse. What is Buffett saying? Tariffs are actually, we've had a lot of experience with them. They're an act of war to some degree. It's a financial war. But who is the war really against? On the surface, it's pushing out China's share of supply in your supply chain. But the war is on your own citizen, because that's what WASA doesn't tell you. It's inflation, because the next best producer or the manufacturing you want at home can't be done for 4 times the cost and half the quality. That's why. It's worse product for more. That's why. It's an attack vector on you. It's attack vector on you in your own goddamn country. That's what's happening. Legendary investor Warren Buffett made a rare comment on US President Donald Trump's tariffs. It's an act of war. He also said further things. He shows great concern for the direction of the US trade deficits with other countries. It's such an important issue. Warren Buffett will explain it. Notable quote, don't take it from me. When you're buying more from I've been using this phrase and I'm reading these quotes. I just prepared this tweet 1 minute before going live with you guys. Sorry we made you wait. I was getting these things up. I wanted to have them near hand. And this is what I've been saying. And he said it before me as a younger man. He said it. When you're buying more from other countries than they're buying from you, you are handing them your investment funds. And if you have surplus nations and they're using that surplus to buy your debt and allow you to carry on, they're not doing you a favor. They're the guys selling you your drugs to take more just to feel normal. But if you attack them and they withdraw, your debt market will collapse. And that's what Europe, a European financial head, said in Europe, right here, right now. He said, we no longer can just view blindly the US treasuries as a full reserve asset. That's what he said. That is Europe now saying, you're messing us around on tariffs, and this debt thing, dollar go down and value go down as well. That's a double downer. Hang on now. You've gone too far. They've suddenly turned around, and that brother they've been lending money to is a drug addict and has turned into a bad drug addict and is now trying to pick their pockets by charging tariffs and flushing them out of their system so that he can get more drugs. And they suddenly realize it and they slap his hand and get. I don't know you want to be part of our family anymore. That's what's happening. That's what's happening. You're giving up claim checks on a country essentially in exchange for more consumption. More than you're producing. We all quit working. We could hand little bits of piece of paper to the rest of the world. But eventually they have claims on all our wealth. Demographics are here, my friend. Boomer pensioners. Like this. You're not a boomer. You're watching this channel. You're paying for Fatty Liver Boy, who lay on his lounger on the beach all his goddamn life chasing bubbles from the dot-com bubble, the property bubble, and every other bubble, and them always bailing him out, and a no-pain economy. He gave you that Goldilocks economy, courtesy of Greenspan, the biggest economic criminal that's ever walked the planet. He should be flogged in Times Square, buck naked. Everyone should get a chance with a cat of 9 tails, beating his ass to the dead pulp that he deserves to be, an absolute criminal. But they praised him. He's so smart. No inflation, ever growth. All the assets can pump. We all mass affluent now because we owned a house and the portfolio of pet.com and boo.com. That man is absolutely a criminal. He's absolutely a criminal. Where was Warren Buffett then? He speaks now. He comes onto our team now. Just as he resigns and tips his hat and says, ta-ra, ta-ra, new man in charge, must go, bye. Where was he then? Where was he with Greenspan? Doing what he did? Where was he saying you're spending too much? It's all good now for former Treasury head Granny Yoda Yellen to go and tell everybody what the potion is for fixing it all after she fucked it up herself for the better part of 8 years as a Fed head and a Treasury head. And this guy, pumponomics on his stocks, all you had to do be his net long through the mega boom of 1982 through to now in a portfolio of dividend generating stocks like WASA did. And they're all heroes. They're all heroes. They said nothing. Let the party continue. Let the party continue. America's the greatest country. You won the lottery. You won the lottery. Now, as they're leaving through the door, shit's hitting the fan, guys. Bye. Isn't that great? We could have done with a bit more of that, a bit more political comment. Now he comes out on Trump and talks about tariffs. This is called establishing alibi, my friends. You go and commit all the same crimes. You do the gang rape with all the rapists. And then you show up and you go to the police and you say, actually, there's some bad stuff going on down there. And you rat him out and you're the guy that said it. You're the guy that said it. I established alibi. I didn't do, it was all wrong. It was all wrong. You now want to be part of the good guys because you knew all along the party would end. That's who they are. They're all prostitutes. But we got some new friend prostitutes in our football team. And then there is retail stock investors. Retail stock investors, David Hunt telling them about the pumper, David Hunter the pumper, and China is wrecked. China is wrecked and there's a shortage of treasuries. Wow. You guys have got a decision to make. Which football team are you playing for? Was Buffett the big beast of maximizing during the bull era and the liquidity era and the bond market final, right up to the bond market final days era, is leaving and is joining our team. Paul Tudor Jones is on our team. Druckenmiller's on our team. Ray Dalio's on our team. And what are they saying? They're trying to tell you short America without saying short America. I'll say it for you because some folk need it spelt out. Short America. Treasury, dollar, they're going down, they're going down, they're going down. You look at the asset market caps of the equity markets in America, you will see it is an absolute giant relative to everything else. Do you really think unicorns of tech can only be born in a Californian garage? Do you really think? Where do you think they're going to come from? I'm telling you, Dubai, Singapore, the East. You're suddenly going to see a dearth of investment as venture capital, the mercantilists that live in this world. Here's your nation states. There's your big ass America. Let's do it for you. Let's get a clean screen. Clean screen this. Blank. Here's how it works. Here's your national region. There's America. There's Europe. There's China and Asia generally. And here is a special color for those that get jet flighted straight into the top. And you have the good old USA that has been the host nation. You have the host nation over here, friends. Book a call while you are here. We are focused on the key element of helping you maximize this, build wealth, preserve capital, and secure yourself freedoms. Because when it bites, it's going to bite hard, and they're going to come and be aggressive. The USA, let's go put the EU on here. Let's change colors. EU. In fact, I did it with the wrong pen. Let's go here. EU. And China. They are moving the assets that they can put in. You've ever heard of dual listings? I saw it in the apartheid era in South Africa. All the big mines, all the Oppenheimer-run businesses that went suddenly and listed in London, and then those became the primary listings, and the Johannesburg Stock Exchange became the minor listings, and they then lived in London, and they drew pound-based salaries and everything else. Here is your mercantilist classes right in here, and they can move left and right, and they can abandon the host. And the host that's on fire right now, for which the abandonment will take place, is the one right here. These guys are going to move there. They're going to move there. They're going to move to the Middle East, Dubai, and everywhere else. And you've been trying to climb up to one day you'll be at top. And then suddenly this whole thing is burning, burning, burning. The fire, the towering inferno with the squibs and the controlled demolition explosions like the Twin Towers are imploding on each other. That's what's happening, friends. That's what's happening. And for the EU, you're a little too close to that heat. You kissed the same leper. You've also got too much debt. You will have collateral damage and collapse as well. And the mercantilist classes are pivoting left and right. And you've been clawing your way up the silo, and the whole thing starts coming down. That is how it operates. That is where you are. That is where we are in the system. That is your football match. And everybody is coming to our team. All the big smart names is coming to our team. Biggest buyers in the stock market. Let's put it into good old X. Let's have a look. Is there any truth in what he says? Such things do not happen at market bottoms. I agree. Give Global Market Observer a follow if you're on X. Global MKT Observe. Good post. There we go. First up. This is retail net buying. Now, I don't know if you remember 2009. Nobody were buying stocks. Nobody had a penny to scratch their backside with. That's how it is. As long as you've got a penny to scratch your backside with, you can still buy stocks. That tells you it isn't the bottom. This is retail. Retail is with David Hunter, meltup. Is with rah rah go USA. The best moments are still to come. That is who retail is with. That is who Brent Johnson is with. That is who retail equity investors are with. That is David Hunter, meltup. That is shortage of Treasury's territory. They're going to do damage to your financial standing by having you invest in debt instruments, telling you that's the best investment right now, by having you invest in US-based equities. This is a short America trade, and you better be elsewhere. Singapore for one. We've given you the Straits Index. You heard it on this channel. We gave it to you quite some time. Let's watch the hammer one more time for the gold versus debt discussion. It's accelerating, guys. It's accelerating. Let's go and find the Straits Index. Remember, booking a call costs you nothing. It doesn't commit you to anything. And anybody who purchases anything from the Market Sniper has my guarantee. You have a 14-day guarantee if you don't like what your community is. Let's have a look at this over 2 months. This is the Singapore index. If you want stocks and you're a believer in stocks, here's your Singapore index. One of the biggest equity-based indices, macro upsides. And you've got a squeezy within a squeezy. We'll drop it down to the 1 month and we'll show you even more. We've told you 8,500. Yep. And that was when it broke. And by the way, you got a second chance. With all the tariff tantrum, you had a chance. You see, tariffs actually give you opportunity. They don't take opportunity away. As long as you know what to do, they give you opportunity. Let's move this and show you exactly why we say that. There's your draw. With our draw tool, 8,635. There's your squeezy inside of that. There's your second interim. What happened over here? Every time, and in fact, I'm going to go back. I'm going to go back and show you the history of this. Every time you get a dip back with such a big hammer, it's a buying opportunity on the Singapore index. There, there, and there. It was also there to a slightly smaller degree. That's where the acceptable face of China will live, and the Middle East. That's where it's going to be. That's where it's going to be. Go and have a look at the Singapore dollar. Let's have a look. Hopefully you're finding a lot of useful value coming in here. And you're hearing things that nobody really wants to tell you because it's kind of uncomfortable. But the thing is, when nobody tells you stuff, and things go suddenly very bad, you get a very, very nasty shock and a bump that goes in the night. It's much better to be told. This is our M head. Little bit rough. Left shoulder, right shoulder, break. Singapore dollar. Not the Kospi and the Korean won, by the way. They are not looking near as good. They're not looking near as good. And when or if the dollar does get its final surge, the Korean won can still be a major run. But right now, it looks for further downside to the US dollar on debt-based loss on value. Debt-based loss in value. There's too much debt, they have to devalue it. You have two release valves. We've told you about these geysers. We did diagrams for the geysers. I can't even keep up with how many geysers. Heating up the geyser, which is wanting to blow up, and you have two taps to release it out. You devalue the currency or you devalue the debt. And actually, you need both taps fully open in the case of America. But the problem if you do that is everybody sees the trade and rushes in. But it's now an open secret. Let's have a look at some of your comments over here. Where are you guys in? Silver is for people. That's right, but the people don't have the money right now. First, it goes into gold. I have gold too. Good, good, good. Mr. Towley says, like-minded people. It has the football under the right armpit. All problems in the world go back to the British, Jeffrey Sachs. Don't nation state. People who nation state. There's a lot of people that nation state things. Jeffrey Sachs, we outed him. He wants globalized government. Go and watch the clip. We need a globalized government. He'll tell you facts and truths about Israel and he'll sound like the new hero. He'll be put on every station. There'll be suddenly this explosion of clips and he'll have all the credibility. He's been tapped up for a message. Global government. That's like Lowell's Finkelstein and tokenization. They want your stuff. They first want to know how much you have, so you tokenize it so that they can see by person, and then they come and take it. That's it. It's confiscation by registration. You will see it coming. Silver will still go up, but we dip harder first. This is the first leg in a long unfurling event. And there will be geopolitics and other things non-financial as well as financial to distract you away from realizing it. And you'll say, how unlucky we are. Another pandemic maybe. How unlucky we are. We have a climate shutdown. How unlucky we are. The green grid destroyed our grid and now internet no good and I can't check in with what my buddy's saying and I can't sell my stocks, but the stock market's fallen 45% in a single day and is looking to be down the other 25% on the next day and the next day, but your device is not connected, the mobile network is down, the power is down. How unlucky that that climate nasty thing happened. All during this time, and who could have known? And it was a Russia hack, it was a North Korea hack, it was a hack. Somebody hacked me quickly, somebody smacked my backside. I'm talking so much bump. Yes, that's the story you're going to get. That's the story you're going to get. Gold, gold, gold first. Gold first. 75% gold, 25% silver. When we cross the gold-silver ratio, you will pivot. Not yet. It gets worse before it gets better. Gold-silver ratio is now heading back up. The real substitute for a debt collapse is not silver, it's gold. Hear me now. Hear me now. This gets worse. Hear me now. Leave the game or game over. No. Don't commit suicide. You'll be fine. The sun will still be up. You'll still be almost as handsome as me. You still have your health. There will still be life to live, but there's things you need to think about to make this less painful. Because if you are the normie or the NPC, this is all going to come out of the blue like nobody ever told you. And believe you me, government is not your friend. They are the attack vector. Tariffs are a charge on the American citizen for the cost of their goods. And by the way, it wasn't China what done it. From World War II, America's production dominance has been trending down, 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 down. Do we talk about the ISOs here? Not sure. I'm not even sure I know what that is. How does this affect crypto? Crypto, good question. I mean, it's the market sniper. The crypto sniper speaks on a different channel. You should all go subscribe and follow. If you're not on the Market Sniper or you're new to the Market Sniper, go subscribe on the Crypto Sniper. It's also on X under the same name, The Crypto Sniper, The Market Sniper, in both YouTube and crypto. But I will tell you right now what Bitcoin is doing just because you asked so politely. Remember, book a call on the link below. You see, there was a channel. It went up fast and then it started grinding. Why did it go up fast? A wind up HVF at a key level on a inverted head and shoulder that generated that target. Let's show you the inverted head and shoulder. That's our chosen neckline. It's complex. It's not beautiful. It was part of a falling wedge, by the way, before that. Break, pullback, break. Make first key level that we identified 93. Stop going up so fast. Grind up. Grind up, basing ascending grind line. Smash through it. Pull back. This is now a little bit of a broadening structure. You need to square up. You might come down just through the 93. You need to square up and wind up again to get new legs. Not good, not good. Not so good at the moment, but generally I still think you run 100. It's just not happening tomorrow. It's not happening the day after. It's probably happening a little further out. A little further out. Let's see what those questions are. So we gave you that. You only buy H-bar. You only buy the H-bar. So H-bar, not so good. It's okay. Look, all the status tokens are going to play a role. H-bar technically okay, but I would say right now you might get better run out of Tron. Right there. And it's already in a setup within a setup. So if you want to choose one, I think Bitcoin having a bit of a rest, maybe one day that dominance will turn. Maybe it's today, I don't know. You'll generally be wrong if you call the bottom, but we are. We made the second interim, we pull back, we're in a wind up, and we go higher. That's our opinion on Tron, but it's been a grind. It's not a burgeoning, blooming, huge, raging bull market for crypto right now. Gold is actually the thing that I'm most excited about right now. The biggest story is the big money. Understand, it doesn't feel like anything to you because you're not the big money. Neither does it feel like that to me. The big money buys gold. The really big money. The debt fail, it's a long gold. The debt failure is a long gold. TLT in gold terms is a perpetual downturner. US 10-year in gold terms, perpetual downer. We've had logic from... There's a shortage of treasuries man who said the interest rates are lower than when they were 5 or 6% on the 10-year. In fact, if you held debt, you're actually up. No, it was actually 25 years, 2000. The rates were whatever, 5%. If you're holding a treasury today, it's worth more because the rates are lower. No, it isn't. Gold was $250, the only benchmark for what that dollar bought you back then. You don't just devalue in treasuries on the valuation of the treasury. You devalue in the dollar against the only thing that maintains its altitude, the plane that is gold. So you don't get to say, because the interest rate was slightly higher than it's today, you're making money by holding treasury. You've lost a massive fortune in buying power. Please don't let them fool you with these Jedi mind tricks or the lack of understanding themselves. Silver made at a euro upside HVF of some duration. Let's make it a weekly. Didn't like it. Let's go to 3 days. Got to just adjust for my tool. That is why it's stalling for a while. It is stalling a little bit for a while. You see that? You made that target then at 30.62. You're in progress decay. You got a rising wedge. And you got slammed, almost like that Taiwan dollar, a mini version, slam. And now you're gestating. Okay, we've got 1008 watching right here, right now. It will come back. The fact that silver made an upside HVF is bullish. But it is in a progress decay period. And that is, for now, means short and medium term a little bit soft. But long run bullish. It will come back, But gold goes further, faster in the beginning. And this is still the beginning. You haven't even felt the fullness of the cycle and the destruction that is to come. Do not moon in my opinion. On a non-advisory basis, it's just an opinion for entertainment-based persons. We are a non-registered, non-financially registered. I think that actually in our favor. But it is not a great time in our view for us, never mind what you decide, you make your own decisions, to be mooning into US stocks, waiting for the all-time high to be smashed on a melt-up of money that comes from where? No bond money, financing machine, no QE, no low interest rates. Where's the money come from in America? You don't have enough money to roll your 9 trillion and your new spending. And you're chasing everybody and trying to nickel and dime your way around. Where's the money come from? It's not melt up territory. It is down. It is down. It is down. It is deleveraging cars, deleveraging houses, record listings, not so much demand, not access to credit. Everybody, no one wants to originate loans in America. That is where we're at right now. The secret's out. The curtain's being pulled back. The emperor's butt naked and he's got a tiny pippy. And he's been acting like a big swinging dick for ages. It's over. Okay, you want more of this filthy humor and everything else we have to say about financial markets. You contemplate protecting your wealth, building further wealth, and securing yourself freedoms. In reset times, this is reset, this collapse goes harder, further, longer down. America is the hot spot, it's the eye of the storm. It's not going to come out of this better than China. America is also not got a shortage of treasuries. It has way too many, and there's way too many coming down the pipeline. And no, they're not worth what they were in the year 2000, because gold was $252 then and is now 3,300, heading for 5,000 plus, then through 10,000, quite possibly even beyond that on a major multiple. You don't know how much bad decisions and fraud has been masked from you. You'll be shocked when the full depth of the unwind is made. You'll be disgusted, and poor Americans will be loathed by everyone and laughed at. It's not fair, but the mercantilist classes did this to you. And they're moving somewhere else. They're changing host to perpetuate the exact same cycle on the next nation. But first a boom, and those nations do all sound money things in the beginning, just like America once did. That's where we're at. Book a call. We can help you. Teach you HVF method, implementing HVF method, how we position on a non-advisory basis so that you can build wealth in collapse. Huge opportunities are in fact available. It's a sad fact that biggest fortunes get made in collapses than they do in booms. It's a sad fact, but it's true. You can be part of that. You can make multi-generational money if you're correctly positioned. You need to know what you're doing. You need to understand money management. You can't blow yourself up. And we will secure you further freedoms in reset times that can help you with the scavenge mode that the governments of the world are going to be perpetuating against you, the citizen, who they somehow are going to hold accountable for what all went wrong. Especially you in the white European nations. You did it all. And you've had it so good, and you've been so privileged, and now it's time for you to pay. And you shouldn't be shirking your duties, exit taxes, unrealized capital gains, you name it, the lot. That's where we're going. That's what's happening. You've got to decide how much you want to be a slave to that punishment and downdraft, or you can protect yourself, taking on board the things I'm saying to you. Till next time, we look forward to catching you. Book a link below. On the link, click, and you will get an opportunity to have a call to help build wealth during this time. The link is below. It's been shared in the comments. Don't forget it. We'll also be talking about other things in our community, from equities, cryptos, etc., that we think will do exceptionally well, when and timing, and how you can break in, how you can maximize, and many other things. Hope you enjoyed the live stream. Thank you for being with us on a Monday. Watch out. Unfortunately, it's a short America. The Captain America, Warren Buffett, couldn't find the words to tell you how lucky you were this time round. He's running, he's cutting, he's leaving. His successor will be more internationalist. He's worried about the dollar. He's worried about the deficit. He's worried about the budget. He's worried about it all. And he's standing down so that he doesn't have to be the public face of a great collapse in the Berkshire Hathaway CEO role. That is my take. Ray Dalio has warned you. It's end of empire. Stanley Druckenmiller and Paul Tudor Jones are shorting America right now in the debt markets and have been for the last year. You heard it first here. You'll always generally hear it first here. You know we told you short oil, go long gold, and you've seen what it's done. It's gone from 14 and it's nearly at 60 barrels per ounce. Think of what you could have done if you're $100,000 long and $100,000 short on oil over this period. And when gold rested and pulled back, oil was absolutely spilling. That's right. It's a perfect proxy. We gave you this trade for free on this channel. Go and check the first time we mentioned it. It's all there. All our videos are all there. Okay, till next time, I salute you. We'll see you on the other side as community members. Thanks for watching. Bye for now.
Are you offline?